Let's discuss the top 3 ways that you can save 100K in taxes for this upcoming tax season if you are a childcare provider or an assisted living provider. The first way is going to be depreciation. What is depreciation exactly? The IRS says that business owners can depreciate any and all of their fixed assets within their operations. So what are fixed assets? Fixed assets are typically tangible items that you can touch physically, such as buildings, vehicles. Let's use business vehicles, for example. Let's just say you as a childcare provider or an assisted living provider, you have a business vehicle or vehicles, because yes, you can depreciate more than one business vehicle in any given year. The IRS says that you can depreciate this business vehicle over its useful life of 5 years. So what does this mean? This means that you have 5 years to receive a tax deduction for this particular vehicle or vehicles. So yes, the more business vehicles you have, the bigger your tax deduction is going to be from a depreciation standpoint, all right? This is so good, guys, because this is when you're well on your way to saving 100K in taxes for the upcoming tax year. Now, what's the second way that you can save this significant amount of money in taxes for this upcoming tax season? It's going to be the Augusta Rule. What is the Augusta Rule? The Augusta Rule is it's another tax deduction. It's another tax strategy that the IRS allows business owners. And what it does is that if you own a business, you're able to hold corporate meetings, board of director meetings in your home, okay? And when you hold these meetings in your home, your business can pay you for holding these meetings within your home. In order for this to work for you, yes, you do have to be an LLC, an S corporation, a C corp, all right? Now, how does this work for you? Let's just say you are the owner of XYZ company and that you rent out your home to XYZ company every single month for the next 12 months. And let's just say you rent out your home for $1,000 per month. How does this all work from a taxable standpoint? So the $1,000 that XYZ company pays you each and every month for 12 months is the equivalent of $12,000, right? So that $12,000 XYZ company gets to write off on their business tax return. But that $12,000 that you received as the owner of the home is non-taxable to you. So it's a double whammy. It's a tax benefit in both ways. It's non-taxable to the recipient of the money, and it's a write-off for the business that pays the money out to the recipient. Okay, so this is why this is like a golden tax strategy. You want to make sure that you're taking advantage of the Augusta Rule. I always inform you guys that if you have any questions, any concerns on how to implement these tax strategies, such as depreciation, such as the Augusta Rule, please make sure that you reach out to your financial professional to inquire about these tax strategies to see how you can implement them, because what you want to do is to make sure that you understand these strategies and that you implement them correctly in the case that you're audited in the future. Last but not least, what's one other tax strategy that's going to make sure that you save 100K in taxes for this upcoming tax year? They're going to be financial instruments that I call traditional IRAs, Roth IRAs, HSAs, which stands for Health Savings Account. These particular financial instruments, the contributions that the business makes to these particular financial instruments, it's write-offs to the business. So depending on how many employees that you have, depending on all the contributions that you're making, your business is making throughout the year, this can be a significant tax write-off for you as the childcare provider or assisted living provider. Now, if you have a financial professional who's already taking advantage of these tax strategies for you, that's great. But if you're that childcare provider or an assisted living provider and you're like, wow, I've never heard of these things. I've heard of them, but I didn't really know how they worked. I didn't know if I qualified, etc. And you want assistance and you want guidance, there is going to be a link below this video. Go ahead and click the link and myself or one of my team members will reach out to you and we'll assess your situation and get you onto the right path so that for this upcoming tax season, you can save 100K in taxes, because you don't want to pay more than your fair share in taxes. You want to keep the revenues that your business is making throughout the year. You don't want to turn around and pay all that money back in a tax liability to the IRS. So let's leverage your IRS code and get you that maximum amount of tax savings of 100K in taxes. I look forward to speaking with you guys soon.